Welcome to Skills to Pay Your Bills. This is a special segment called the Wealth Zone University. And as you know, our mantra is changing your mind about money so you can change your financial future. Welcome to our show. I'm your host, Don Moragne. And today, another special day because I've got a very good friend here. And the friend is more than a friend. He's a banker. And as you all know, we've been talking about saving. We've been talking about protecting your money. We've been talking about the real secrets of money. And two of those secrets of money, saving, protecting, and also earning a respectable return, require that you have a relationship with a bank. But even more, I brought my close friend Simeon Harris because the relationship I want you to start is with a banker. So let's start with introductions. This is Simeon Harris. He's with SunTrust Bank, and Simeon is a business relationship manager, and, well, he's a relationship manager in the business division, right?
Mm-hmm. Correct.
Simeon, tell them who you are. I don't even know why we even try it.
Yeah, well, the technical name for what I do is business banking relationship manager.
Good.
With SunTrust
See,
Bank.
I almost got it right.
And primarily what I do is I work with business owners, both for-profit and not-for-profit. And I try to guide them and direct them on, what they, should do around cash flow management. I provide deposit needs, lending needs, and also treasury management services as well. So really from soup to nuts as far as, business banking needs, I'm able to take care of that.
Great.
At SunTrust Bank.
So you work essentially with sole proprietors, corporations, and nonprofits in helping their businesses to have a good cash flow stream?
Correct.
Okay.
Correct. Yeah, usually the clients that I work with are, between the $1 million and $10 million annual revenue size. And with them again, it's, lines of credit, commercial mortgages, things of that nature. But really diving in deep and asking both industry-based questions around, as well as questions around their particular business to see how we can, again, guide them and direct them on, different services they should take advantage of, and also things that we can do as a bank to help them out, both as far as short-term goals and long-term goals.
Okay. So let me say this first. Simeon and I have known each other for about 3 years. And over that period of time, he's come in and he's done very well in terms of taking care of our clients. And so our referral relationship is really good. That's number one. Number two, Simeon is a guy who really cares about the outcome for the customer and the client, which I find rare and very intriguing about Simeon. But thirdly, Simeon is the guy who makes sure that the business itself gets what it needs. And also, Simeon is the guy who makes sure that the business does what it has to do to continue to enjoy the relationship that they've established. And so, Simeon, where does it start with a client? I mean, do I just walk into the bank and then say, Simeon, I need a loan? Or, when do I start the relationship with you?
Well, the process usually, is in such a way where if the client, business owner, or a person of influence within the business comes into a bank and asks a question around, let's say, I want to get a commercial mortgage. Usually the first person that they will see will be a financial service representative.
What?
A financial service representative.
Okay.
Within the bank. They're what we call the platform personnel. Those are the people you see at the desk when you first walk in.
Okay.
Or
So those are people that are sitting in the branch normally?
Yes, sir.
Okay.
Or assistant branch manager or branch manager. So if they have the question about lending, lines of credit, commercial mortgages, usually what they will do is call me up and get me in contact with the client.
Okay, so not to interject, but it's not the client that's calling you, it's the personnel in the bank that calls Simeon Harris.
Yes,
okay,
in
good.
that case. But in some cases, it may be where the clients call me directly.
Well, that's a relationship we have.
Yeah.
But, but for most people coming in, their conduit to you is through the personnel in the bank.
Yes, sir.
Okay.
And so when they get in contact with me, what I usually do is set up a time where I can come and meet with them. The type of service I set for my clients is where I come and meet them at their place of business because they're in a comfort zone, and I'm able to ask them questions about the business. And of course, that day is full of the daily task of running the business. So what I do is I set up an agenda. I send them an agenda a week in advance as to everything that I want to cover with them. And within that agenda, I ask for their feedback. And if there's anything missing around what they would like to discuss, then they email it back to me and I prepare accordingly. So to make the best use of their time.
Prepare what?
Accordingly.
Accordingly, okay. So before we get to all the heavy stuff, I want to just back up 1 second and get to the relationship stuff. So I come in, my initial contact is going to be with someone in the bank. And that someone in the bank can help me with putting together checking accounts, savings accounts, deposits, kinds of stuff, the daily kinds of stuff.
Exactly.
And so when I need to get into heavier kinds of things, that's when they call the relationship manager you and bring you in, right?
Yes, the business banking relationship manager.
Is it safe to assume then that I already have a checking account and savings account and everything else when they call you in? I just need something beyond that?
Well, what I try to suggest for my branch partners is to not just set them up with an account because, again, I don't want to have it set up like a cookie cutter situation. So what they will do is, what I would like for them not to do is open up the accounts for the client, but more so get me in contact with them so I can ask those questions and provide them customized solutions to meet their needs.
Got it.
Because with the account that they may set them up in, it may not be the right account for that particular client, industry, as well as their transactions.
Okay.
So part of the questions I will ask is to make sure that I get the current statements, analyze those, and then come up with a customized solution to provide the checking account, saving accounts, and then when we get to the heavier things like lines of credit and commercial mortgages, then we can have the conversation as well.
Okay, so that's good to know. So their relationship with you is such that you want to get them in the right direction to begin with. And that's where the relationship starts. So once we have contact then, how often should I, as your customer or as a business person, be interacting with you? How often do you want to see me? How often should I be talking to you?
Good question. Well, SunTrust Bank has a structure where I'm reaching out to my clients every 3 months. And in some cases, I may be sitting down with them face to face. What we try to make sure we're doing is being proactive in regards to their efforts because from day to day, month to month, things will change with the business, especially in the area that we're in right here, in the D.C., Maryland area, government contract and things of that nature. You can win a contract tomorrow and all of a sudden your needs have totally changed. And so with me being a relationship manager for that particular business, it's all about me sitting down with them, maybe every 3 months, every 6 months. What I try to do is customize my approach based on the client's needs, but they can expect a phone call from me or sit down with me every 3 months.
All right, that's commendable. Now, one of the things we tell our audience is that do not be afraid of a bank, and you need to know your banker.
That's right.
And so one of the things I want to make sure that we understand about SunTrust and the way it's set up is that you're in the department different from the branch.
Yes.
Right? So how is that echelon set up? I know it's the interaction you just kind of explained to me, but you're not actually in the branch. So how is it set up in terms of just what departments and how your department interrelates with the department that I would ordinarily see when I walk into the bank?
That's a great question. We're separate, but we have a one-team approach. In regards to how I have my branch partnership set up, I have 7 branches that I support within the D.C., Maryland area, and based on the client's needs when they may walk in, or current clients, then the branch will get me in contact based on the different situations. So we try to make sure that we again have that one-team approach, make sure that we have the client's best interest, in the forefront as far as how we direct the clients, in regards to their needs. So, say for instance, a client came in, business owner, they're looking for a line of credit, government contract, and the cash flow is at a point where maybe the accounts receivables are lagging a little bit behind, but every 2 weeks the personnel will want to get paid, and they're going to have to make sure that all the uncontrollable costs are taken care of. In that case, it may be where I will step in and look at a line of credit for the client.
Okay.
Or again, say for instance they come in and say, Simeon, I'm tired of leasing. I want to purchase my own facility. At that point in time, I will have a conversation with them around the commercial mortgage and run through the process with them and make sure they have support and also the education around what will be the best for their company.
Okay. So I'm in a brand new relationship with you. Do you want to see my business plan? Do you want to see my financials? I mean, what about me do you need to know? And what about you should I know in order to become a better customer for you?
Great. Let me start with the piece of what I would like to see around the new relationship with the client. Business financials would be wonderful. With that, it's all about cash flow management and that will give me a good
Now,
idea.
stop for a second. What does that mean? What does cash flow management mean from a banker's perspective?
Well, the simple definition of that is from the time money goes out to the time it comes back in.
Okay.
That's the cash flow process. From the time it goes out to different expenses, mortgages, leases.
Okay. So it's what I'm spending and what I'm paying
And then-
that you look at first, and then when the clients are paying me to get their money back in the flow.
Exactly.
Okay.
And with that will provide all the information I need through the client's what we call profit loss documentation, and also balance sheet. So if I have an idea, if I have the documentation from the client, then that will give me good information around how to advise them. And also, let's say, for instance, like you said, a new client. If I'm able to see what their current banking relationship is with another bank, I can look at the transactions in the account and see how to advise them accordingly as to what deposit accounts would be good for them. And in some cases, it may be where treasury management services are needed. And I know that's a fancy term, but the simple way of explaining treasury management services, it's from online banking to being able to provide business clients with the ability to send ACH credits, to be able to automatically debit clients' accounts.
So it's electronic.
Yeah, electronic
banking is.
That's a simple way of putting it.
Cool.
So anything pretty much that a business will want to do electronically, remotely, we're able to set them up on that. And in many cases, being able to make those recommendations as far as solutions, where they may think that they need a line of credit, they may not need it.
Okay.
It's all about the cash flow management, having the right services in place to be able to expedite your receivables, and in some cases, slow down your payables.
I like that. I like that because that fits right into the kinds of things that we do as financial management accountants, is planning how that cash flow goes, and we want to expedite the receivables and slow down the pace. So, I mean, that's why there's a synergy there. Simeon said two things. He said he likes to look at the business's financials, which means, folks, that you have to have financials in the first place. So you don't wait until it's time for you to have a relationship with the bank to figure out how you're going to get your accounting done. That should be something that's ongoing. And so essentially, if you're going to have a good relationship with the people in the bank, you have to make sure that the documentation and the data that they need to make some good decisions are available to them. But you also have to remember that you need them in order to make good business decisions, and they become part of your management team. And so that's really important to know.
And I want to say something with that.
Please.
Is that with the financials, it's very important that they meet up with an accountant such as yourself to be able to provide sound, financials. Because in a way, it's almost like driving a car with no steering wheel. It's dangerous.
It's dangerous. And I paid him for that last comment, but not under the table. I actually gave him a check. We're going to take a break in a couple of minutes, come back, and then Simeon and I are going to kind of delve into some of the things that Simeon has done for my clients and some of the things where he can really be helpful, commercial lending and those kinds of things. We're going to talk more about it. In the meantime, if you go to our website, right there, and you hit us on Twitter, which is #DonTalkingDollars, give us a call, give us a talk. Also, I need you to call Simeon because regardless of where you're banking now, you should be talking to this man and considering moving over to him, whether he's at SunTrust or anyplace else. He's the man to talk to. Simeon, when we get back, we're going to take a little bit more time to get in depth to some of the things that you think business owners should talk about. And then I'm going to talk about with you while you're here some of the things that we suggest that they do in terms of being able to begin to fund themselves at a certain point in time. And so don't move, don't go away. Remember, our job here is to change your mind about money so you can change your financial future. And those of you who are in business need a good banker to help you do that. Stay where you are. Don't leave. See you in a minute.
Hello, I'm Chase Slade, the coolest 8-year-old kid you will ever meet. My grandpa Don gave me so much money last year, my piggy bank could no longer hold one more dollar. He told me to watch Skills to Pay the Bills on Channel 10 and learn about the real secrets of money. Then he told me to watch Egyptian Secrets on Channel 10 to learn how to stay healthy and well. You can be cool and healthy just like me by watching Skills to Pay the Bills and Rock Your Block on every week on Channel 10.
Welcome back to the second segment of the Wealth Zone University. Again, I'm your host, Don Moragne, and our special guest today is Simeon Harris. In the first segment, you got a feel for who Simeon Harris is, what he does as a banker, how SunTrust is set up, and how Simeon feels that the relationship between the business owner and the banker should emanate and continue to grow. We also talked a lot about the fact that Simeon really looks at the financials and the financial health of a business in determining how he can best interact and make that business successful. So here you have a person who is an integral part of your management team who comes in, who wants to help you. You just have to make sure that you do your part and have the financial information available to make that happen. In the second segment, we're going to talk a bit more in depth about different products that Simeon has provided to our clients and provided to other clients, so that you can get a feel for what's out there, how Simeon handles it, and some of these technical things and how they're doing. So Simeon, back to you. First, before we get into that, tell us, how did you get into banking and what brought you to SunTrust?
Well, I got into banking straight out of college. I was working at a career management center at my college, Old Dominion University in Norfolk, Virginia, and you know, it was a bank that was interviewing, and so you know, put in my application, and that's how I got into banking as a founder center manager associate.
Okay.
So at the age of 24, I was a branch manager.
All right.
And so it was you know, truly a blessing, you know, to have that experience, have that opportunity straight out of college. And that catapulted me to my career, you know, current day. I've been with the business banking division of SunTrust Bank since 2010.
Okay.
I moved from the Richmond, Virginia area.
To come up here to find us. Yeah. Yeah.
Yeah, September 2010, and you know, I'm loving it. You know, SunTrust Bank is a very solid bank, and the way it was structured around the relationship management piece, with me having a big bank behind me, but also a small bank feel as to what their expectations were around me managing the relationships with my business owners. I really loved that. And that's what I was looking for when I came over to SunTrust Bank, and that's what I found.
Right. And it seems that SunTrust is a good natural fit for you. You seem really comfortable there.
Yeah.
In my research, I found out SunTrust is about the 9th biggest bank, and it came out of Georgia and has been continuing to grow, right?
Exactly.
And so they're really big in this area. And again, if you're not with SunTrust, think about getting with Simeon. And you know, wherever Simeon goes, you go, okay? But Simeon, in just a couple of examples, the things that you see that are important to business owners, the kinds of products and projects that you've been working on with business owners. Would you give us a feel for some of those things?
Well, you know, the current trends in the market right now, of course, we're dealing with the low interest rate environment. You know, a lot of clients say, well, you know, money market accounts aren't paying as much. CDs aren't paying as much.
True.
And so when you look at, you know, CD and money market accounts, but also you look at the loan rates, you know, being, you know, as low as 3% and things of that nature. That's the reason why the money market account rates and CD rates
are low.
Sure.
Yeah, right.
And you look at, you know, historically around, you know, 1980s, you know, you had interest rates in the teens as far as getting a, you know, mortgage. Right now, what the trend is, you know, people stopping, you know, the trend around leasing and trying to purchase their own facility.
Okay.
Around, you know, the commercial mortgage or rather commercial facility.
Okay, and that's smart, and they're doing that because the interest rate on is so low.
So low.
Take advantage of it.
Exactly. You know, you're paying $5,000, $10,000, in some cases as much as $15,000, especially within the DC market, for a small amount of square footage. You can really own your own condo facility or
Put your business in
building. Put your business in there, and you can talk more to the clients about the tax benefits from it. But from the day-to-day expenses, the uncontrollable costs, which we talked about earlier on, if you're able to minimize that around your you know, monthly payment around your commercial mortgage, then that's always a way to go.
Okay.
And so that's what I'm seeing right now, people looking to do more commercial mortgages. Also right now, we're looking at SBA lending. People, you know, business owners in the past, you know, looked at SBA as, oh no, you know, that's a long process. You know, it's set up for clients or, you know, rather business owners who aren't doing well, and you know, it's the total opposite now.
Okay, so that was true and is no longer true, or was never true?
A lot of changes.
Okay.
You know, came about with the SBA, you know, products.
So it's streamlined and it's faster.
Exactly.
Okay.
With SunTrust Bank, we're a preferred lender through SBA. So what that means, you know, just to simply put it, things are expedited going through a bank such as SunTrust Bank, which is a preferred lender. And with SBA lending, it's not just for clients who are, you know, not able to get a conventional loan, but it's really set up for clients who are trying to hold on to their liquid capital,
Okay.
their liquid cash. So with the conventional mortgage, let's say, for instance, the trend right now, the conventional mortgage, for the most part, you get to put 20%, in some cases based on the industry risk, 30% down.
Now we're talking about commercial mortgages,
Mortgages,
now. Okay.
exactly,
Right.
commercial mortgages.
Commercial mortgages.
With the SBA lending, we're talking about as low as 10% down.
Okay. So
On.
the SBA guarantees the mortgage.
Exactly.
Okay.
Yeah, the way it's set up is 40% guarantee through the SBA,
Okay.
50% from the bank, and the 10% that the client is putting in as far as cash.
Gotcha. Okay. That's great.
Exactly. And it's certain, based on, well, here at SunTrust Bank and within this DC, Maryland area, I work with SBA champion Derek Mims. And Derek really puts out options for the clients because what you want to provide to the client is options.
Now hold on a second. Who's Derek Mims?
Derek Mims, he's the SBA champion.
Okay.
What
What's
that
an
basically
SBA champion? I mean, somebody who just runs faster than SBA than other people. You know?
Exactly. What it means is basically he's a specialist.
Okay.
He's a person we have assigned at SunTrust Bank.
Oh, so
within
he
the
works
DC,
for
Maryland
SBA.
area.
Okay, I got
He
you.
works for SunTrust Bank and gathers together the documentation for the SBA loans.
Okay,
for
I got
clients
you.
who come to SunTrust Bank.
All right.
And we look at different options around SBA lending, conventional, and we give them all options. And so based on what's the best for them, we run with that option.
Gotcha. Okay.
And so, with SBA, with Derek Mims, again, we're able to save clients money as far as putting money down on loans. We're able to save clients cash in the pocket, as well as within their business. And also, we're able to provide them different terms and also, schedules as far as amortization is concerned, based on how long the mortgage is supposed to be amortized out for. We're able to save them money month to month based on
So
that.
let's delve on that for a minute. So in this market, it's good in any market to have real estate, especially if you're in business, commercial real estate, an asset.
Yes.
And so with the SBA process, getting in is cheaper because you only need 10%. There's the guarantee, and the paperwork is faster because of the streamlining that you go through. And so it's a good process, and then it may also improve your cash flow, right?
Exactly.
So what about the closing costs and those kinds of things? Does that change with SBA or not?
Well, with the closing cost piece, is very similar to, to the conventional loan.
Okay.
And again, before we go to the closing table, what we'll provide is a HUD-1 with all the information that they need around the closing costs for the loan.
Now, you were going to talk about the guarantees. So let's hit on that, because that's the part that people really need to know about.
Yeah, well, with the business, you have the business as a separate entity, all right? Then within that, of course, you have the business owner.
Owners.
Whenever we do a loan, commercial mortgage, or line of credit, we're going to have guarantees on that line of credit or loan. And what a guarantee is basically any person who owns 20% or more of the business is required to guarantee the loan and a way back it up as a second source of payment. All right, first source of payment is going to be the business, second source of payment is going to be the guarantees, and third source of payment is going to be whatever collateral we have in place.
Okay. So is there ever a circumstance where I, as a more than 20% owner, do not have to personally guarantee a transaction?
No.
Okay. So I needed you to hear that. I needed you, because it comes up all the time, but I needed you to hear that. That's number one. Number two, having that 10%, does it have to be money that I've got already? Can I borrow it from a neighbor? Do I take it out of my cash flow? Where does that, what are the rules and requirements for my 10% down?
Well, we would like to have it as far as liquid cash within the business.
In the business,
that would
okay.
be the preferred way of getting it, whether it's in a money market account, CD, being able to pull it from reserve funds from the business.
Okay.
A lot of times we want to see also is that once the purchase is done and that cash is spent out, at least having 3 months to 6 months of operating expenses, still being able to operate your business going forward.
In the bank.
In the bank.
Okay, and so that leads to the thing that we always advocate to all of you business owners, that when a deposit goes into the bank account, that you should take 10, 15% of that, move it, not spend all of the money that you get all of the time. You should be putting money away in some kind of reserve account, savings account, so that you can begin to capitalize yourself and be ready to talk to Simeon when he says, where's your 10% coming from? You'll have already done that just by following our simple rule of taking 10% of every one of your deposits and moving into some kind of reserve account. What Simeon is saying, and Simeon, I don't mean to speak for you, is that you have to be a healthy business and be able to show them that you're a healthy business and a good business owner in order for them to help you. Is that right?
Exactly.
Good,
Exactly.
good. Now, there are a couple of other things that in a commercial loan that a client has to be aware of. So do they have any responsibility after they make the loan to meet certain kind of performance indicators or give you any kind of reports after that?
Usually with the commercial loan, the terms are set up, it's not the same as a personal loan. Such as the personal mortgage. You have a 30-year mortgage, and once you sign that documentation, as long as you're making the payments on time, you never really hear from the bank. With the commercial mortgage, it's a little bit different. Usually you set up on a 5-year term, let's say 15-year amortization, 20-year amortization. What that means is that your payment schedule is going to be based on 15 years, 20 years, amortization schedule. In some cases, it may be more, depending on the risk factors of the loan. But with that 5-year term, that means that in 5 years, we're going to look for you to bring us the financials. That's profit loss, balance sheet, tax returns for the past 2 years. Depending on how far along we are in that year, let's say, for instance, we're just getting out of March. Okay, if your loan came due, let's say in February, we just want you to just give us pretty much 2012, 2011 tax returns, and we wouldn't look for interim financials for 2013, so we're just starting out.
So for the 2 months that expired in 2013, they'd be looking for those.
Yeah, because what we want to do is gauge the risk on the loan, also to make sure that this is the best thing still for the client, and from the standpoint of adjusting, the rates, adjusting terms to fit the client's needs, all that can be done in 5 years' time. Because just like on the personal side, from year to year, the business needs may change as well.
Simeon, I really appreciate you coming in and talking to my audience here. It's very important that you hear a couple of things that Simeon said to us. Beginning a relationship with the bank helps you to become healthy financially. But the ongoing relationship with the bank, it's to your best interest and their best interest if that health increases and maintains. So that's why it's really important that we realize that being financially savvy in your business, having a good financial management team, and having a good management team with a good banker is the best thing that you can do. We thank you for hanging out with us. You'll see Simeon again. Please, his number and information is right there, so give him a call. I can guarantee you that when you interact with Simeon, you'll be interacting with a professional who cares. We will see you in the next segment, but for now, I just want you to do 2 things. Remember that we're changing your mind about money so we can change your financial future. And don't forget our challenge. Look us up on the web. Hit us on Twitter. We'll talk with you soon.